let's not get carried away that the yuan is being adopted. But we now have to be alert for dollar corrections as we're attaining the targets. S&Ps look like we could have a failing rally. Of course, we're going to have to throw our charts away for a while with Draghi on Thursday, Yellen speaking this week, and for sure the NFP is going to be one of the most important, critical, highly volatile NFPs going into a potential Fed rate hike. We're getting a lot of soft data here out of the U.S. Most commentators believe the Fed's going to go ahead. It's going to take an extremely weak NFP jobs number for them to be on hold. We'll see. That could be behind what's going to drive the dollar correction. To me, it looks like S&Ps are posting a failing rally. So with the dollar making new highs, the S&Ps are not, making them somewhat vulnerable. I can't rule out 21.20 for one more push up, but I am looking for a correction both in the price of equities and here's your Dixie. So those that have been coming to these webinars and following me for a while know that I've been looking for par 33 to par 55 in the Dixie. Even last week when we had that initial bounce in the euro, I said 1 hour, 1 day does not a trend make. The high in the Dixie and the D's contract so far is par 36. So we're there. So the euro's doing nothing. It's like watching paint dry today. But I have a hard time wanting to be short euro here, wanting to be long the dollar here. I guarantee you that we have some intraday divergence. We also have some daily divergence. Looks like the RSI high was 70 here. And this was at the beginning of the month, making new highs the last several days with an RSI reading of 67. So we are not confirming new highs in the dollar. At the minimum, it's a warning sign not to be aggressively bullish the dollar, aggressively bearish the euro. I will say this, the pound is outperforming, and EG now looks like there is potential for a decent break. In my view, it's going to be a dollar buying opportunity. Euro GBP buying opportunity, dollar selling opportunity. So here we go into the end of the month, and tomorrow is the first day of December. So normally if you finish the month on a strong note, early in the month you're going to get some follow through, but be alert for reversals. I've seen many inflection points on the NFP, so even if we get a bullish number in the dollar, I would view that as a dollar shorting opportunity. Give me a Y if you're with me. Another forecast that manifested, I've been talking about 1052 gold for quite some time. Well over $100 ago, we did achieve that Friday on the partial session. Here's a look at the gold, and we are getting a decent bounce off that low. Nice little inside day. Looks like this could have been it in the gold. Here's 1, 2, 3. The low I was talking about for a while was 1052. Can't rule out one more surge down, but so you have a similar setup here in both the dollar and the gold. Aussie looking still resilient. I'll get to that in a minute. There could be a third drive to a top developing in Aussie above 73. So this was another good call from up here, 1050 gold being achieved. So even if we rally and break towards 1040, 1030, I think that very possibly we're entering a period where you don't wait to buy gold, that you buy gold and wait, especially taking physical delivery against the dollar. I think we could have a pretty dramatic rally setting up for December or 2016 at the latest into April. So gold, no longer want to be short gold, achieve targets. Could we make one more low towards 1040, 1033? Definitely. But initial objectives have been achieved. Do not be short gold now. Give me a Y if you're with me. So we talked about Canada setting up a top as well. Crude oil is trying to stabilize here. We did have a nice rally in the Canadian in the last few days. Still believe it's setting up shorting opportunities. There's a look at your crude oil market. Getting a nice reversal in the crude. today, trying to, at least after holding previous lows of 39. I'm not going to go bonkers bullish crude yet. In fact, I would have preferred, well, it looks like we did take out the stops by a few pips in crude oil. So still alert for shorting opportunities in USD CAD. Give me a Y if you're with me. And then we also look at the treasuries when correlating the yen. I said to be patient on the yen, that we could have one more drive in the yen up towards that 24 range. That looks like that could manifest as well. There's your bond market. To me, I have a hard time getting bullish on a formation like this. To me, it looks like we just are grinding up in a flag formation, so we'll see. This is saying that the yen should have been heading down. When TLT goes down, US dollar yen goes up. And when TLT goes up, yields are falling and US dollar yen should go down. That's not what's happening today. Risk on is taking place more in the S&Ps than in the Treasury market. But even the S&Ps are lower, Dow down 50. Give me a Y if you're with me on the outside markets. Of course, the dollar I correlate with all the currencies. It has the closest resemblance to the inverse of the Euro USD. The Swiss National Bank gave us another example of why I really don't cover it much anymore. I covered it because someone in the webinar last week asked me for some commentary on it and where it might peak. And again, the intervention and manipulation by the SNB has me not paying as close of attention to the Swiss as I used to. Give me a Y if you understand why. And last week, Friday, was a real-time example of how much impact they could have on the market, because compared to the euro, US dollar Swiss showed a lot of strength. We did not have commensurate weakness in euro USD. If you understand that relationship and correlation, please give me a Y. Any questions on any of the outside markets that I've covered? Gold has achieved objectives. There could be one more cleansing as we set up with reversals into December. Perhaps Santa Claus is going to have a hard time getting his sled off the ground, especially since we had very sustained, consistent dollar rally and S&P recovery going into this time zone. And with that, if there are no questions about how I correlate the S&P with the dollar, the gold with the Aussie, the oil with the Canadian, and US dollar yen with both the S&Ps and the Treasury market. Anything before I move forward to our instruments? Give me a Y if it's clear. Okay, here we go. As usual, we'll start off with Euro USD. So I had this line drawn about a week before it came off it. Actually did it last week. Let me just go with the zoom out a bit. So I had this line drawn going into this. I talked about moves back down towards this 550, 570 range, and we had a nice bounce. I said one day or a few hours does not a trend make. And here we are retesting it. We're still diverging. So if we're going to get another test of this return line, which has worked pretty well, some significant bounces off this return line, it's now coming in at the 105.20 level, about 40-50 pips from here. Draghi should be able to talk it down to this level. So if the ECB and NFP takes euro back down towards 520, I believe it's going to be a buying opportunity. One thing that's a little short-term disconcerting to me is how euro pound is acting here. So euro is making new lows and euro pound wasn't, and we ran into some very stiff resistance here. We could be setting up what I would call a ascending triangle. If euro pound can resist, making new lows here, flat line at 70.75. So perhaps we're just going to test these lows. If not, should there be one more washout in euro pound, I'm a buyer at 69.13. So it's still possible that the euro could retest this return line that I pointed out at the 526 level, and euro pound does not make a new low. That would even be more evidence and confluence that a dollar turn is at hand. It's very possible that we're just going to hold here. I still remain bullish. My big picture, regardless of what kind of jiggle we get here in the next few weeks, is that we could be putting in a right shoulder if the dollar really accelerates on a jobs number. As I said, between 69.10, 68.60 would set up a third drive to a bottom. It's still my view that we either have a right shoulder here. Here's your left, here's your head, here's your right shoulder. Your first confirmation that we're on our way would be action back over 70.80, which could take us to 71.90, 72.70, and then back to resistance up here at 73.70, 74, which is the neckline of this formation. Give me a Y if you're with me. And see that there could be a short-term hiccup in euro pound, but the long-term picture has not changed. This is a bottoming process. Hello, Bill, welcome to our community. It's a bottoming process, and it's very possible that we don't have to make a new low. We'll be more bullish if the euro made one more new low down towards this 105.20 return line. Down here, and the RSI stay above the 30 range, and 40 pips should not change that picture. On a 4-hour, the divergence is even more telling. We haven't confirmed a low since the beginning of November. The RSI low in the euro came in on the 6th of November. So here we are almost into December with no confirmations on the 4-hour. So again, my view is if we trade down here towards this 105.20 level, that we should hold the 30 level for a reaction. And where could that reaction take us? If we are going to get a bottom here, of course, our first targeted buy stops are going to be above these highs, which were the highs off this first bounce, 640. But then long-term parity bears in the euro are going to have there's a lot of stops here over 106.90, a lot of stops here over 107.60, a ton of stops for position traders above 108.29, and I have 200 days on the 4-hour coming in up around 109, and on the daily 2 is holding the 30 level, and I have reaction levels at 107, and here's that 110 level. Back to the breakdown. This was a breakdown. So the big surprise could be a recovery in the end back towards the breakdown. Some type of fib retracement from these highs to these lows. The daily 50 comes in at 110.10. So regardless of the next 50 to 100 pips, as long as we don't close under 104.40, which was the March low back here, here's your weekly. Because if we take this 104.60 level out, I think we're going to 102.5. You're not getting what? It's fib level. I have the fibs drawn from this low, although I think we're going another 40 pips lower. So I'm ballparking them for you. And halfway back is going to be here. Halfway back is going to be here. 38% is doable at 110. So 109, 110 is 38% back of this whole decline. Does that help? So at first, I'm not calling for a dollar crash. Okay. So be patient and follow along. And I would recommend for you, are you currently trading? I'll give you a little personal mentoring. Are you trading now? Okay, are you trading a live account? Okay. I would trade micro lots for at least, okay. I would reduce your leverage until you have 3 to 6 months of real-time trading. That's right, it was. I agree with you. When you're in a learning curve, I don't like demos because you don't have anything on the line and you don't get the hang of what it's like to have money on the line, which is an emotional element for everyone's trading. But while you're going through your learning curve, you are going to have losses. And I would recommend to you that you trade micro lots, minis at the most during that time frame. Of course, we're all captains of our own ship, but I'm just speaking from about, okay, I'm just speaking from about 30, 40 years of experience until you get your methods down. Okay? Me? Yeah, over 30 years. See, I'm an old guy. Here, look. Can you see me? This is what you're going to look like after you've been trading for 30, 40 years. Okay? You're going to look just like me. All right. Just wanted to give you a little realistic look. Okay. You want to stay young? All right. Well, give up trading. No, I'm just kidding. I love trading. So you know what? If you love trading, the money will follow. If you're doing it just for the money, it might be elusive. So you have to love what you do, and the money will follow. Do you love trading? Just for the money? Wrong reason. Wrong reason. I'm telling you. Okay. All right. Well, let me get back to my coverage here, all right? Okay. All right. Someone said follow your passion, and your passion is money? Okay. All right. So let's talk about money. So let's just take a little shorter term look at what's happening here in the euro, and I do think that there's just too many bears in the euro right now. I know a lot of people are looking for under parity. It may happen, but I think it's going to happen after we shake out some bears. Okay, so I'm looking for a reversal here in the euro, and I use divergences to tell me that, and return lines to tell me that. And I had this line drawn before we bounced the other day, and you could have made money off this line. So take a picture. It's coming in around 520, 510. And then I'm looking for a recovery in the euro to eventually take out all the buy stops. When I look at a market, I go, where are the stops? Okay? So where are the stops in the euro right now? There's only one place. There's only one place left for sell stops. And that's under the low of the move we had in March of 104.60. Okay? There are no sell stops, right? Okay. Because everyone's gone. And the question I get is, how low can the euro go? When everyone's asking you how low it could go, you know that it's a very crowded trade. So in my view, I think there's going to be at least a correction in the dollar and the euro. Most likely starting on the NFP or the ECB Thursday, Friday. So I'm looking to fade euro weakness, dollar strength into the ECB and NFP later in the week. Give me a Y if you understand that. And there are many more buy stops above the market. I believe there's buy stops here, there's buy stops here, there's buy stops here, and a ton of buy stops here. So after we bottom, I think they're going to squeeze the shorts. And initially, I think we go 107.5, 108, but I'm open to 109.5, 110 sometime during the month of December or January. Give me a Y if you understand my analysis in Euro USD, and then I'll move on. So let's move on to pound dollar. Pound dollar, talked about it taking out this low up here at the 61.8 level. That's been achieved. Pound dollar as well as diverging. It's diverging with the euro, but my return line says I should be patient and look for a 100 pip break down towards 149, 149.50 for a possible counter trend trade. We're getting some nice divergences here in the pound, but I think that we could still take it down towards 49.50, maybe another 100 lower. I will give you some advice right now. Do not try and predict which way the market's going to move into red news events like the ECB and especially the NFP. So I'm always flat into those events because to me that's a roulette bet. It's black or red and has nothing to do with trading. You could throw your charts away for a while. I guarantee you that the markets will be here after the NFP. Make sure your equity is. Yeah, it's just a guess. It's just a guess. Again, I'll say we're all captains of our own ship. I know that some people do take positions into the NFP. I just believe that, okay, you're a gambler. So all I could say is when it works for you, all I could say is good guess. Good guess. That's all it is. It's a good guess. So if you want to guess, be my guest and guess. So anyway, I think the pound, along with the dollar peaking, the pound is also, I think, down around this 49.5 level. There could be something to do here in the pound. I'm a little bit more focused on the euro because I think there are more shorts to be taken out in the euro than there are in pound dollar. And also, I'm still looking for some type of low to develop here in euro pound. And when I'm bullish euro pound, my preferred long is the euro. When I'm bearish euro pound, my preferred short is the euro. My preferred long is the pound. And when I'm bullish euro USD, my preferred short is the pound. So even if you don't trade euro pound, it's a good idea to pay attention to it because this will help you in trade selection based upon which is outperforming, which has more relative strength against the other. And my big picture is that I think that we could be setting up some type of significant bottom here in euro pound, even if we take it down one more time for a third drive. And there's still a possibility that we do not make a new low. So that makes the pound, when I think that the dollar is going to rally, My preferred short's a pound over the euro because I am looking for a bottoming formation here in euro pound. If you get that, give me a Y. Okay, moving over to US dollar yen. Last week I said I didn't think we were done because we confirmed this high. Here's drive 1. See the RSI? Very high reading. So momentum confirmed price. Then we had our first divergence right here, under 70. And perhaps we get one more shot up. This would be a 3 drive formation here. Doesn't have to get there, but we have a strong NFP number. It could get there. Here's drive 1. Here's drive 2. And drive 3 could take us up towards this 124 range. And that could end up being a short in my work. Here's 1. Here's 2. I teach a lot of 3 drives. So if the dollar is going to be peaking out, I should be looking for a shorting opportunity in the upper 23s, 124 range in US dollar yen. And the reason for that is, consider this, the dollar's making a new high. The yen isn't making a new high. The yen's high was all the way back in June, its first high. Here's its second high, back in August. And this is our third potential lower high, our second, really? First lower high, second lower high, looking for a 3 drive formation up around 124, and you protect it with stops over 530. Because if we start getting through there, we're going 129, 130. But viewing strength in the end, post ECB NFP up around 124 as a potential shorting opportunity. Give me a Y if you're with me. Potential 3 drive formation setting up in the end. This was your first high. This is your daily chart. So the example I'm trying to show you here is this. Here's your dollar index chart. The dollar's making new highs, and the yen has not made new highs for quite some time. So to me, that's a message. The Swiss is making new highs. Canada's almost making new highs, but the yen is not. Look at your daily charts. So again, I'm going to be on the lookout for a reversal there, up around the 124 level, or a potential short. I wanted to show you the Aussie because last week I showed that we had 2 drives right here. Here's 1, here's 2. A third could take it up towards 73.24. But it's my view that now that gold is close to a bottom here, that for position longs, I'm a seller up here in Aussie at 73.20. And I'm a buyer between 71.10 and 70.80. I'd love to see the gold make one more low without the Aussie. So here again, the dollar's making new highs, right? But the Aussie isn't making new lows, is it? In fact, the Aussie hasn't made new lows all the way back to the 4th of September, right? So I'm viewing this pullback, if we get this pullback towards 71.30 to 70.90 as a buy in Aussie. Because if they can't break Aussie when the dollar is going to new highs, what's going to happen if we get a dollar correction? Right? If Aussie can't decline when the dollar is strong, what would Aussie do if the dollar corrected? The great thing about what RoboForex does, if you're a client of RoboForex, they do record these. That's right. It should go up at an even more dramatic clip. If it's performing when it shouldn't, when the environment changes, it should act as an accelerant. So pretty much the inverse setup in Canada, right? Canada's been pretty wild. So if we get another rally later in the week towards 450, 460, I'm looking to short USD CAD. So if I'm bullish Aussie, I should be bearish USD CAD, because I'm a little different than most people. I'm looking for commodities to start performing, the dollar to begin declining, and a weaker dollar will be supportive for both crude and especially gold. Give me a Y if you're with me. So other potential reversal candidates are Aussie, Euro Aussie right here, that we're diverging in Euro Aussie. Way overdue for some type of correction in Euro Aussie, maybe all the way back towards 154. So I'd be looking at the Euro crosses. Same with Euro CAD, nice divergence in Euro CAD. So I'd be looking to buy the Euro and the Euro crosses, and that includes Euro Yen as well. I believe we're beginning to put in a bottom here in Euro Yen. And the guppy also looks pretty good to me. I'd be looking to buy pullbacks in the guppy. This could be a big one that we could take all the way up to 189. Up here, 190. And it would still be corrective. Any questions on anything I've covered today? Any questions? Okay. Go ahead. Your question? Okay. Divergence. Okay, I've been teaching what I look for in divergences for over 2 years here now at RoboForex. My ideal setups for divergences are more than one divergence. So here's one. Look how long we've been diverging. Here's one. Here's two. Here's three. Ideally, they stay above 30. Okay? So I recommend that you go, okay? And on shorting opportunities, say for example in USD CAD, this was drive 1, confirmed high. This was drive 2, a divergent high. This was drive 3, another divergence. And if we head back up here again, we're going to have another. So there are lots of 3 drive formations above 30 at least 2 times, at least twice. Look for 3 drives. 3 is a number of completion. And for shorts, under 70. Under 70, at least twice. At least twice, look for 3 drives to a top. Thanks for your interest in my work. Good luck, everyone. I'll be back with you Wednesday. We'll see how things are shaping up into Wednesday. Of course, the big days this week are Friday with the NFP and potentially Thursday with the ECB. I would prefer that you ask RoboForex.com if you could have that. Okay? Andre is my contact. All right? Good hunting, everybody. Remember, Abai, don't just count your pips, count your blessings. Inshallah. I'll see you on Wednesday. Thanks for your attention and great questions. See everyone Wednesday.